Welcome back. Well, let's get to the fourth headline that we're tracking this evening. Sources tell CNBC-TV18 that the Income Tax Department conducted searches at the premises of Metropolis Path Labs, accusing them of concealing unaccounted income. The company's stock nosedived over 7%. Timsi Jaipuria has more.
Well, that's right. Sources are indicating to us that IT department, based on its internal investigation reports, is currently conducting search operations against Metropolis Path Labs. These search operations are covered across several locations at Mumbai, Delhi, Chennai, and some places in Gujarat too. The top management of Metropolis Path Labs is also under IT scanner, and the claims that IT department has is that there is a straight case of unaccounted and concealed income. As we speak, investigations are underway, search operations are underway, and we are yet to get any quantum or any specific details as to how much is the amount of unaccounted income or concealed income that IT department is claiming, whether it has actually got detailed reports, detailed proofs during these search operations or not. Investigations are still underway, but yes, sources indicate that enough evidence is available with the IT department, based on the internal intelligence reports, based on these only, these search operations are being conducted. Let's see how soon they conclude and what is the final outcome of these search operations. Back to you.
Okay, all right, Timsi, important story there. But let's move on to the fifth headline now. Defense stocks surged in trade today. HAL and Bharat Dynamics surged over 3 to 4%. Meanwhile, Mazagon Dock shipbuilders traded 1% higher in trade after it reported a strong set of Q2 earnings. Earlier in the day, Sanjeev Singhal, the Director of Finance at Mazagon Dock Shipbuilders, said he expects revenue growth at 25 to 30% in FY23.
We would like to revise our guideline with respect to FY23 to around 25 to 30% of growth compared to previous year. So we are expecting somewhere around 7,400, 7,500 in case all the things go as per our plan. So that would be revenue guidance for the current year. Margins, we don't expect a significant change. However, there would be a positive effect definitely on account of leveraging the fixed costs as the volumes go up. So I would not be very particular about the margins. We would be maintaining a similar kind of a trend. Last year also the margins were better, and a slight improvement could be there based on the higher volumes.
Okay, well, moving on to more PSU news. Railway stocks surged in trade today. IRFC and RVNL were up over 5%. However, IRCTC traded 1% lower. Vivek Iyer is standing by to tell us how these railway stocks fared in today's trading session, as well as since October.
Well, absolutely right. There's been no stopping, these rail PSUs. So what we've actually done is, since October 28th, one date from which, all of these stocks have actually started moving upwards in tandem. Also our colleague Nimish had highlighted it, and, saying that, this entire pocket was being seen quite favorably by HNIs and also being seen as quite an undervalued theme. Well, is it undervalued anymore? Looking at the price moves, you probably agree that it's not. But let's have a look at some of the moves that these stocks have seen. The first one, of course, is IRCTC. It's been flat, but however, look at some of the moves the other names have made. IRFC, this stock is up almost 19%, stock perched at a fresh 52-week high. RailTel is up almost 17%. Again, this one too is at a 52-week high. You're talking about RVNL. This particular stock has been the clear outperformer, up almost 57%, again at a 52-week high. And RITES, this particular stock has been flat. However, if you recall, our colleague Yasha reported on November 4th that, there's a likelihood of a supply overhang due to an OFS, which is why this particular stock has underperformed relatively. Ircon is another stock that's up 34%. We also had a look at, the key takeaway from the Q2 results from these stocks. IRCTC, while earnings was the marginal miss, one thing that the market hasn't liked is the fact that the company has said that they don't plan to hike the convenience fee, so they aren't looking at any fresh triggers for this particular name. RailTel, gave a very strong guidance of revenue and EBITDA of growth of 20% in FY23 and beyond. RVNL came to CNBC-TV18 and they indicated that they intend to keep an order book of about 1 lakh crore. Very strong commentary coming in there. And Ircon too, gave a very strong Q2 with a strong order book of over 40,000 crores.
Okay, all right. That's on railway stocks. But stay with us, Vivek. MSCI released updates on the treatment of the stocks of L&T Infotech and Mindtree post the merger. Tell us about that.
Well, that's right. So the only missing piece of the puzzle as far as the LTI and Mindtree merger was the fact that how exactly would passive indices treat both of the stocks post the merger actually happens. And now that both of the companies have gone ahead and said that November 24th is the record date, that has given clarity to the index manager. So MSCI has yesterday given an update saying that what's actually going to happen is that on the trading day of November 22nd, what will happen is Mindtree will be removed from the MSCI indices, and the weightage of LTI or Larsen & Toubro Infotech will actually be increased. In all likelihood, as per analysts, this could be a net neutral event in the fact that the outflows coming out of Mindtree would actually be quite similar to the amount of inflows that go into LTI. So it's an important event in terms of passive fund management, and November 22nd is the date on which this particular event will occur.
Okay, all right, Vivek, thanks very much for that. Well, on to a CNBC-TV18 exclusive then. The revival of Jet Airways has hit a turbulent mark. Sources say lenders are likely to take a stand against the Jalan Calroc consortium in court, saying the conditions for the takeover have not been met. CNBC-TV18 reported last week the consortium is yet to make any payments to the lenders to assume control of the airline. Ritu Singh is here with the details.
Well, the impasse between the Jalan Calroc consortium and the lenders of Jet Airways is growing by the day. And in the latest development, we've been given to understand that the Jalan consortium recently moved the NCLT, seeking to take control of the airline, claiming that it has met all the conditions precedent required for the takeover. However, we've been given to understand from our banking sources that lenders will contest this claim in court, and they believe the conditions have not been met, which included securing slots, international traffic rights, which alone requires the consortium to have at least 20 aircrafts to be able to fly internationally, a condition that they have not yet met. The court has given the lenders time to file their reply, and the next hearing in the matter is the 29th of November, the date to watch out for. In other developments, the monetization plan for Jet Airways, which includes selling off about 11 of its owned aircrafts to raise some money, that has also been put on hold given these differences that have now cropped up between the consortium and the lenders. Lenders are also wary of the ongoing investigation reports against Florian Frisch in Europe. However, we understand they've not officially sought a response from the consortium on the matter, but they do remain concerned about it. And lastly, on the matter of the PF and gratuity dues payment, which the NCLAT had directed the consortium to pay to employees about 250 odd crore rupees, that we understand the consortium has clearly told the lenders it will not pay any additional sum of money, and it has to come from whatever has already been allotted. And that is the response they gave to us in their reply to the CNBC-TV18 query, where they said they're ready to take over the company. They met all the conditions, already transferred 150 crores to the lenders, and there is no delay on their end. And as far as the PF gratuity due matter is concerned, they've already made it clear that no additional money will be given out.
Okay, all right, Ritu. Thanks very much for that. In fact, let's stay with the aviation space. As reported by CNBC-TV18 earlier, one of the key flashpoints between the lenders and the consortium was the payment of PF and gratuity to all eligible employees until the commencement of insolvency. There has been a standoff over who will make these payments. Madhiya Mujawar has been reporting on the deadlock. She joins in with more.
Well, it clearly looks like the lenders are not keen on holding any further. As you rightly mentioned, payment of PF and gratuity has been one of the flashpoints between the consortium and the lenders. Let's look at how it started. In October, the NCLAT directed the consortium to make PF and gratuity payments to all eligible employees until the commencement of insolvency, that is June 2019. According to the calculation of my sources, this amount comes to over 200 crore rupees. The consortium had earlier told CNBC-TV18 that its payment towards all creditors is capped at 475 crore rupees. Now, in an application filed with the NCLAT on the 15th of November, the consortium has stated that if the court is expecting the consortium to make these additional payments, then they should be first made from the positive cash balance of Jet Airways and then from the 475 crores that it has reserved for various creditors. The positive cash balance of Jet that the JKC is referring to was estimated at 225 crore rupees in January when it had sought NCLT's permission to use that money. Whether the NCLAT will allow using this money to pay statutory dues is not clear as yet. Meanwhile, lenders have already taken a 95% haircut on their loans. So it was unlikely they would agree to pay these PF and gratuity dues from the few hundred crores that they're yet to receive. Back to you.
Okay, all right. Thanks very much for that. Well, on that note, it's a wrap on this edition of Markets Today. Thanks very much for watching.